Okay, I guess we are good to start. Obviously, still a number of participants will be joining us in a short while. So very good morning or very good afternoon to everyone who found the time to join us for an exciting launching event of our mobility community. As you might know, Qorus is already for a couple of past years trying to connect members around specific topics of the future financial services industry. And one of them is definitely mobility. Our intention is to create something new for bankers which resonates, the topic that will definitely define the future of financial services industry, because building a new proposition around mobility ecosystem is what we have heard from many of our members among the key issues. So today we have prepared for you a very exciting session which includes some great speakers that you will see in front of you. I'm not going there right now in details because we will have specific times when each of them will have their space and time to present and to share some of their ideas, some of their highlights and best practices. Now, in the very beginning, without any further ado, I would like to pass the word to our CEO, John Berry, who would like to share with you a couple of as well welcome words and give you a bit overview and background of why, how, and what are we going to bring by mobility community as part of Qorus. John, handing over to you.
Thanks, Lucas. Then welcome everybody, whether it's morning, afternoon or evening with you. Pleased that you've been able to find time to join us today. Not everybody, I think, will understand and know an awful lot about Qorus. Qorus has been around for over 50 years. We started as EFMA, rebranded last year. We're an organization that is the leading global environment for insurers and bankers. We have that global reach. We have operations with our members in some 150 countries around the globe, thousands of brands from around about 120 financial groups that operate as part of our membership. We've been renowned for an organization that is very much in the innovation space. We have getting on for 7,000 case studies which have access for all of our members to be able to see what's going on inside the organization. But an organization that is very much about being at the forefront of change within financial services. We're not an organization that has the solutions itself, but we're there as a catalyst to help drive the reinvention that is happening right the way across the industry. And certainly as far as the community environment is concerned, as you'll see on the next slide, then we have an environment with CVA within the community space. We started our community environment some 2 years ago, being hugely successful particularly in the SME community, which is the one we started with. But we've been wanting to be very much at the forefront of all the change that's going on, not to be a follower, but leading the place. And I think that's one of the key reasons we've got this arrangement with CVA. We're absolutely delighted that we have such a quality organization to be able to deal with this growing environment that is having significant impact on our future world in so many of the things we do on a day-to-day basis. We're very future orientated. What enables us within this space is to offer a unique environment to interact, to share best practice from other members, something which nobody can achieve in any other market at all. And I think it's that community environment working with key brands such as CVA that give us that opportunity to share some of those valuable insights with you today and into the future. So I hope you have real value taken out of today. I know from the speakers, we've got some really quality individuals here to be able to share the information with you. But just before we get into the event itself, I think it would be useful if Lukasz was able to share just a little bit more on the community side, because it is the community environment that is so important to us as an organization. An environment where that, as I say, that unique space for sharing, whether you're in insurance or fintech, the leasing companies, rental car companies, mobility, intact at so many of these organizations. And our job is to bring everybody together to create a thriving environment where people are able to learn. Lukasz, maybe you would like to share just a little bit more on the background on the community activity we've been involved in.
Thank you so much, John, for introductory words. Yes, definitely, exactly as you mentioned. I think it's about the right partner with whom we are able always to launch the right community with the right topic. Mobility community, as I mentioned, in the very beginning, is the one of this choice and open to all of you in the first year of its existence to join free of charge any of the events, any of the activities that we'll be undergoing. So that's probably in a short nutshell of why and how the mobility. But this event is exactly dedicated to that, and you will see why and why we see mobility among the key trends and for the future. So why Qorus communities? John already mentioned that, so I'm not going there in details, but we are trying to create a real non-compete environment and a place for bankers and insurance companies to exchange best practices around different topics. Mobility is one of the key ones and the new ones that we are introducing, but a part of that, we already have a proof of concept and a great experience with the 5 other topics of communities that we launched within the last 5 years. Whether it's SME banking, digital reinvention, sustainability regulation, open finance, or insurance. And we strongly believe that with the membership that we have created among or within those 5 communities, we'll increase the value, we'll increase the delivery, and we'll focus on the new topics that will form the future of financial services industry. Now, shortly in a nutshell, just to present you a few numbers that you see, the whole footprint of communities. We have at the moment more than 500 executives from around the globe, and you see a couple of the brands yourself below there, who are actively contributing, participating, and gaining the insights and the best practices from this community. We are on a daily basis working on a member-to-member connection and exchange of the ideas. On a weekly or a monthly basis, we produce online events which are delivering key top-notch speakers at the same time with the value which is being produced post-event. You see the coverage yourself. We cover right now as well Australia with a number of institutions being involved already in SME community and a couple of the others. So I guess that's it. We do not have to go in details because this is the launching event which should bring you a bit more insights on why we are launching the mobility community and what will be the key trends and focus we would like to do with CVA as our key partner of this community. Now, without any further ado, let me introduce one of our key speakers, Marcus Collet, who represents CVA, which is already mentioned as our key partner. So Marcus, without any further ado, I think you will take a lead to introduce us as well some of the great speakers that we have in front of us, including your colleague Max, that you will take a lead in the beginning. Handing over to you, Marcus.
Hello. Thanks a lot, Lukasz. So can I be heard? I don't see. I can be heard, right? So thanks a lot, Lukasz, for this kind introduction. And indeed, I'm very excited to welcome all of your mobility community members to the webinar. I have the privilege to guide you through some of the sessions of this morning or afternoon, as outlined before by Lukasz, starting with a brief introduction of why we're actually here. And indeed, why should anyone talk about auto more now than some years ago? And why should we, players active in financial service in particular, talk about it? So in order to understand this, Max and I propose in what follows some slides, which is actually a brief story of systemic change. And that is probably what is particular about what's happening at the moment, because not only there's one challenge like electromobility or batteries, retail models, software, which is happening, but all parts of the ecosystem are actually shifting at the same time. And this sort of introduces a change which is inevitable, which is massive, and which is profound. And I think this is what is moving the mobility sector today. Now, concerning some words on CVA, and that's really just going to be 30 seconds. Strategy consultancy founded more than 30 years ago, 17 offices, and operating with ecosystem platforms. So you see the one on automobility in the center. And I think this is an interesting concept because we try to organize in a way to more address the issues of the future than managing the problems of the past. So we actually have a deep knowledge in all of the silos you can see here in terms of OEMs, of dealers, of leasing, of rental, of IT platforms, of autonomous, and so on. But in addition, we can connect the dots. And I think this is, in such systemic change, probably the major difficulty, how to actually make sense out of this moving environment. Now, this systemic change, if I had to show that on one page, that's probably the page. Now, what you see here is the evolution of an environment with two different rationals. And on the left, you see a bit the reflection of the old world. So you see the auto stocks, which is in yellow, and you see the Euro Stoxx 600. And what you see is actually that the traditional auto business is lagging behind the average of the market. And why is that? It is because there is a feeling of uncertainty, and this uncertainty somehow leads people to discount the sector. So uncertainty leads to a clear loss of speed in the traditional automobility sector. But then you see on the right side some of the EBIT multiples, and you see people like Tesla, like BYD, Great Wall Motor, and you see that some of the players, they're actually using this uncertainty, these options, in order to actually attract interest and hope from a number of investors. So this is a bit the situation of the sector today. Uncertainty somehow introducing risk. On the other hand, uncertainty introducing also opportunity. And I think that is what the automobility players today need to position in. And this uncertainty comes from two sources. So there's obviously the exogenous influences. And much of this stuff is actually more downside. So some of it is also upside, and this is why I asked Max to put a little sun behind the clouds. So that stands somehow for what you see in terms of technology and also environmental constraints, which can be opportunities. But a lot of those elements here you see in terms of inflation, of geopolitics, of pandemics are obviously downsides. You also have uncertainty through structural disruption, which are actually the factors which depend on how we collectively manage the ecosystem. So here you have a lot of the topics we will talk later about, like electromobility, about the traditional OEMs developing value strategies, new OEMs coming in, retail evolutions with agent models, software, and so on. So all of this is introducing a significant element of uncertainty. And in order to understand and talk about uncertainty, we actually always or often use a tool, which is the S-curve. So the S-curve is actually a pretty good tool in uncertainty because it does describe how systemic change actually happens. So you have two easy parts. The first one is on the left side, the present and the past, because that's obviously something we know. And then you have a pretty slow evolution forwards. And then you see in the long term, you see where all of the systemic change is bringing to. And actually the long term is not so complicated, because if we sit down, it's pretty easy to imagine where we're going to be in about 20 years. The tricky part about systemic change is the slope in the S-curve, right? Because that's where you get the dynamics and where all of the different factors play together. And if you see this little red arrow, you see that today we're only at the beginning. And you see on the right side, that should normally come up now, you see a number of different drivers of this dynamic. We have here put 7, you could put more, but those are the essential ones. And you see there's electric vehicles, electromobility, you see the change from ownership to usage, you see a new consciousness of used cars in the context of multi-cycle. You see softwareization, which is the increasing sale of services based on enabling of software in the vehicles. You see OEMs going from volume strategies to value strategies. You see new tech players like Auto1, like Kazoo and others. And obviously, not to forget regulation. And you see all of those trends, they develop at different speeds. And what is interesting is that even electric vehicles as one of the main components seems to be advanced, but we're only about at 1% of electric vehicles in the overall stock of vehicles. the charging points are going to evolve by a factor of 6 in the future. So we are only at the beginning. So without further ado, I'm now asking Max to take us through the individual trends. Please, one word, we will have a survey at the end of this presentation. So please already take out your smartphone, which will give us the possibility to get a bit your feeling on those trends after Max's explanations.
Yeah, thank you, Marcus, and welcome everyone. Also from my side, we don't want to spend too much time on each of these systemic changes, but just to briefly recap and give you an introduction. So electrification, I think there's no doubt anymore that it's going up. The European Union has decided, at least on new car sales, it will be dominant latest 2030, latest 2035. So new car sales will be electrified. It will be a little bit less or slower in the total vehicle fleet. What does this mean for finance and insurance players? So first of all, electric cars are a bit more expensive, so asset values are there. You would also experience more uncertainty with regard to setting residual values in the right way. Relatively fluctuating prices right now. Also, electric vehicles will have lower service and maintenance need in the long term, which enable them to also be used for a significantly longer time. So we have the second major change. Customer demand is shifting towards usage. So customers don't want to directly purchase a car in cash, but rather using options like leasing or subscription or rental. What's changing here in the financial industry is basically you will have cars on multiple cycles, a significant increase in balance sheet as these vehicles will now be on your balance sheet instead of the one of individuals. On multi-cycle, which is the third major change, we see that new cars, if you sell them, only roughly a third of the car's value can actually be achieved. So many players are moving into multi-cycle, especially also OEM players. And you can just see here that if you start as a leasing company or as a financial player to keep these assets for a very long time on your fleet, you need to manage them. Also in times where vehicles are older, where service and maintenance might not be that certain to predict, but where electric vehicles certainly play a big role in enabling this. The fourth trend on what we call softwareization, taking here the example of GM. GM today has 16 million connected vehicles on its fleet, expecting to double this already until 2030, and they expect to also make significant revenues with software in the future. And that's a key trend which enables you also in a second use cycle, for example, to put the car and personalize the car again to a new customer, not via hardware functions, but actually via software. And that's something key for finance and insurance players also to enable that in the first place, but also to understand how to handle that if suddenly the vehicle's worth increases over time again because you've unlocked additional mileage on your battery, for example. We have a fifth trend of OEMs pushing distribution and retail. You're familiar that OEMs are introducing agent models, for example. So there's a change for financial service players and leasing companies that potentially in the future they won't get their cars from dealers anymore, but would have to partner directly with national sales companies. Also, OEMs here are significantly increasing their control over the asset, not only in the first vehicle life cycle, in selling the car as a subscription, but then also potentially for a second and third life cycle, which is competition at least. And then we have a sixth one, digitization, or actually the professionalization of the dealer environment. You see that dealer sales outlets are decreasing over time. Nothing new here, but what we see majorly is that some of them are heavily investing in creating online brands. And as soon as they are online, they do not only capture the value part, which was usually the dealer's value, so the sale of a car, but they are actually covering the whole value chain. And for finance and service and insurance players, that's critical to understand that the brand is key. and that they also need to integrate themselves into these value chains of online players. And then the last one on regulation, very briefly, we expect that regulation of mobility services like rental, but also leasing is more shifting towards finance again. So comparable regulatory requirements as loan finance. And just an example here is how different today equity ratios of individual players are. We're expecting that the advantage that leasing has today might disappear. The worst or the best part is that all of these trends, of course, are interlinked. And that's why we want to also understand from your side, for everybody who's participating in the call today, what's your impression? What are the major opportunities, but also major threats of these individual trends for finance and insurance companies? And for that, we have an interactive part where we would ask you to take out your smartphones, either scan the QR code or go to menti.com and enter the 8-digit code. And then you can basically rate all of the 7 services that all of the 7 changes that I just presented as to how big the opportunities or threats are. Markus and also the panelists have already put in some first results, so don't wonder. And he's going to comment on them, but please share your insights and answer online on menti.com with the 8-digit code.
Yeah, so now up to you to work. And indeed, I think it's quite interesting to understand how actually those trends are going to play out in financial services. So electric vehicles, while you vote, perhaps a bit of a voice over electric vehicles with the new kind of assets, with the batteries, with a different kind of asset model in terms of services, ownership to usage, where TCO becomes more important than potentially the tickets, the importance of the used car in the context of multi-cycle, additional services based on software, OEM value strategies, how actually OEMs capture additional value on the vehicle in the first sale with services in the used car sale, tech players, which are having a bit of a bad time currently in terms of market value, but I'm pretty sure that they're going to come back. And obviously regulation, which is one of the constants in the ecosystem. And we're seeing the evolution. What's interesting here in this matrix is definitely the lower right corner, because that means only opportunity and no threat. So electric vehicles seem to be here the best positions, at least for the time being. Still, it's a bit like Eurovision. It keeps evolving. Then we have, in terms of threat and no opportunity, that would be the left upper corner. This would be more regulation. Okay, obviously, this could be disputed because obviously regulation is also a barrier to entry for people wanting to come in. But we see that the audience is seeing that more as a threat, and you see the order is actually pretty stable. Even if the last people who are voting are still changing this a bit. So you see, quite interesting that not all of the span is being used, and indeed 1 and 7 are stable, 5 as big threats. That's obvious, because if OEMs clamp down on asset, that's going to be more difficult. All of the others, then you have as a further threat, number 6, the tech players. Number 3, multi-cycle is more opportunity, and 2, ownership towards usage. So makes sense. I won't remain longer on this. Anyway, we're going to publish that on LinkedIn later, but I think it's already interesting that there's an order establishing which obviously makes sense to a large extent. So after this first section, perhaps now going on in our timeline. I'm more than pleased to receive a representative of a player who has been and continues to be one of the key catalyzers of change going forward in automotive. Jakob Böhme, who is leading Tesla Financial Services in EMEA. Jakob, it's great to have you here. Thanks a lot to be here.
Thanks, Markus.
So as leading Tesla Financial Services in EMEA, you also have been formerly at Allianz. So somehow your career has unfolded at the crossing of disruptive new auto technology and a complex financial services landscape. So obviously Tesla is a disruptor, quite different from typical OEMs. And we are obviously all interested to know how Tesla will play out on financial services. No? So, but to start this off, in terms of opportunities, what would have been your prime 3 opportunities from which have been mentioned you would see as opportunities in the sector?
Yeah, for me, I selected for sure software is a major topic. Software can increase the utilization rates of the vehicles, so the asset actually becomes more valuable, and also the utility of the asset. So the asset is actually being used not just as a pure mobility play, but also fun, entertainment, lots of other aspects. So yeah, software is definitely top of the list. The other one is sort of this OEM value topic. I think that Tesla clearly is a sort of a tech play, right? But what people typically underappreciate is kind of just the way how we've disrupted the overall business models of what you would call a traditional OEM. So I think there's still a lot to be done in this space, in particular for other OEMs. And then, yeah, these are the 2 I took. I didn't choose 3.
Okay, I completely understand them, and indeed, it's true that the deeper you look into the Tesla model, the more actually you understand how disruptive it is, and I think there's still a lot of disruption mileage in the model now. You have disrupted a lot of topics. You talked about software-determined vehicle. That is something that you brought into the landscape, charging batteries. Now, financial services. Do you think that this is the next domain to disrupt in automotive?
Well, yes and no. I mean, I honestly think that innovation, the words of innovation and disruption are probably the most overused words in particular in the financial services and insurance industry. There are a lot of slides, a lot of consultants, a lot of people who are talking about this, but in reality, what's arriving for customers that is actually affordable and valued is reasonably limited, quite frankly. I think the disruption lies a lot in the basics, just very good online journeys, integrated journeys, simple journeys, honest journeys. Car finance, I mean, like we're having all these sessions and so on, but it's not rocket science. It's like 5 variables. It's a PMT formula in Excel. And that's basically what it is. And it's always the same thing, up and down. And I think it's about getting those basics right. And when I look at the overall industry, I just see so many misaligned incentives between the customer, the OEM, in many cases, the dealerships, but also lease cos and even sort of finance companies as well. So I think at Tesla, we're trying to unwind most of these things in a sort of much simpler way. But yeah, so we are disrupting by actually, in a way, moving backwards and actually reestablishing finance as a very simple tool to pay for the car. It's a payment method. It's not. It's not. Yeah. So we're actually trying to keep things much simpler than going into a lot of these sort of fancy ideas.
Yeah, knowing that a lot of tech disruption actually has been a simplification. So that's how I talk a bit your answer. Now in order to do this, it seems that you're building up a bank in the UK and in Germany. Is that in order to see how far you can push this simplification and the basics? And isn't that a big challenge, getting to know the difficulties of a BaFin, for instance? Yeah,
so we are live in UK and Germany. In Germany, we have a leasing license, so it's a reasonably small license. So we're not a credit institute in Germany. In the UK, we have a broader license covering all the typical products. So yes, we're exchanging with BaFin, and it's okay, you know. Yes, it's yeah, it's okay. I'm trying to be polite. No, but
we know how to this.
Yeah, no, I mean, I feel sorry for these guys, you know, because there's a ton of regulations out there that is basically, in my mind, aimed at other types of players. People who are really pushing finance onto people who have very aggressive online models, and that's just not the case for Tesla at all. So I think a lot of this is sort of misaimed, and so we just have to sort of exchange with them and explain more clearly our business model. Okay. But yeah, no, but certainly regulation is the biggest barrier for entry for companies like ours, I must say, and a lot of these startups, I assume. And it's a bit disheartening sometimes, because I feel I work a lot with our partners. Some of them are also on the call here, but I do feel there is a strong lobby. The big established banks benefit from this regulation the most, because it creates these barriers of entries. But it is a risky play, right? Because people will find a way to solve these things over time, because the business opportunities are so big. They're basically creating a dam. You're building a dam, yeah. and that dam will break. And but yeah, so we are going cautiously into these regulated spaces, and I would actually appreciate if the regulators would regulate leasing similar to loans, quite frankly. Because what we're seeing on the rental side is a Wild West, and then on the credit side, it's like completely over the top for car finance. But yeah.
But this is something I think which is currently ongoing, and indeed that's probably in the future. The future will bring some changes, and potentially also regulate more on areas where it's less regulated. So now Tesla has been quite radical in price changes in the last time, which could also be seen as a simplification, right? Because you say, if I want to sell more cars, then I lower the price and then more people buy. So is that something which this kind of FMCG pricing that's a structural part of Tesla's strategy? And is it clear on how you manage all of the implications in terms of residual value? Perhaps you want to say something about this.
Yeah, I mean, it's quite clear. I mean, our mission is to accelerate the world's transition to sustainable energy, and part of this is clearly to reduce the cost of electric vehicles over time and their TCO. So that's kind of what the mission of the company is. So, and we've been very deliberate about this, also in making significant improvements in manufacturing, but also our business model has much lower SG&A costs. So we can actually afford to reduce prices and pass on savings to our customers. And any Tesla customer, well, I would think most of them know that they're part of a transition in the car industry, whereby the EVs will become cheaper over time as full scale is being reached, and as new players bring in lower costs and better business models. So in that sense, yes, it is sort of part of our strategy. Is that going to happen like all the time? No, it's not. It's not fast-moving consumer goods pricing. It's more like software pricing. We price to value. We don't want to price to, a lot of the car industry is based on commodity. To consider car a commodity, and I think a lot of players in the industry actually would like it to become a commodity. Hence, all the discussion around subscription, flipping cars over, short-term rentals, and all of that. But as an OEM, with all respect, I think our aim is to not have the car become a commodity, but rather something that is truly valued by customers and that is software enabled, and can actually make money ultimately for its owners. So yeah, it's not a fast-moving consumer goods because it's, at least from an OEM perspective, it shouldn't be a commodity.
Okay, now
we are not.
Yeah, but now what does that mean then for residual value curves, right? Because that is obviously a bit the sanctum of in automobility of the past decades. That should upset it though, no? I mean, do you have an RV curve like other OEMs have an RV curve, or is that you have a different concept for value of a car a long time?
No, I mean, we do have an RV curve. I mean, we must calculate monthly payments, right? So it is sort of a formula in the end with 5 variables. So we must have like a future value of the car, something that obviously when we're talking about leasing, we must calculate. So yes, we have some grids, and that's what we use, and we try and use the same grids for our preferred partners as well. So not just in the captive, the captive is there to for us to show to partners also that we are walking the talk, and that we're not just pushing risk, let's say, to them, and not carrying risk ourselves. And yeah, it's a pretty straightforward curve. I mean, it's reasonably straightforward, quite frankly. I think the RV topic is one where Tesla is finding it. We cannot do something that is completely contrary to the industry, right? Like, we need partners, and we need the overall market to understand residual values moving forward. So we cannot go completely against the grain, let's say. So I think our curve is reasonably standard. I think we're a little bit more bullish on longer terms, in particular, because we think EVs will age much better, in particular Teslas, thanks to the powertrain, battery technology, and more importantly, maybe even software updates all the time. I mean, the list of software updates we do is just mind-blowing. So the value of cars actually should decrease less over time. There are other factors pointing the other way, but I think that's where I think we would disagree with some of the typical RV setters like Autovista or something. Like, this is where we sometimes sort of have conversations with them. And then the other thing around RVs is that there's still a lot to play out. Like, I mean, there are some pretty realistic scenarios that these cars will appreciate at some time. With autonomous driving becoming reality, particularly in the US, pretty soon, we could become witnesses of the biggest asset appreciation in the history of time, where suddenly millions of vehicles can be autonomous of Tesla with a click of a button, and suddenly these cars will be worth much more. So of course, a little bit of a crazy scenario, but and at least for Europe, probably a little bit further out, but it's something for everyone to think about. These cars could potentially be worth much more. The other point around RVs that is completely unappreciated is scrap value of vehicles, second life of batteries, third life of batteries. There's much more in EVs than in an ICE car. And then the other thing that is underappreciated is that at the moment, most used car buyers are reasonably uneducated about electric vehicles. I think they're finding it hard to appreciate what is a good EV versus a bad EV. And I think over the next 5 years or so, we will see many market actors become much more educated, and as such support much higher RVs in the future. So yeah, There's a lot of movement in that space, certainly.
So definitely RV a good issue on for Tesla and also for globally the electromobility sector. Perhaps a last question concerning insurance. So we have seen Tesla introducing UBI in the US to ensure better and more just customer premiums in a way. Now, 2 questions on this. Has UBI worked out for Tesla in the US? And is it something that you're working on alone or with partners in Europe? UBI being usage-based insurance.
Yeah.
Modulates the, I'm saying this for the audience, which modulates the insurance premium depending on your driving style.
Yeah, absolutely. So I think insurance is definitely an area where we have a lot of legacy. I mean, I used to also work for an insurance company, and when I look at the insurance rates for EVs in particular, I find that the entire industry is sort of pricing approach reminds me a little bit of what the RV setters had like 4 or 5 years ago. They just didn't understand EVs very much. And so I think the insurance industry will see tremendous change in the way it's creating sort of basic parameters around pricing will sort of have to be reviewed. I think it will happen naturally over time as we see more competition on pricing in the space. Yeah, and we're definitely bringing Tesla Insurance to Europe. At some point, we already have a Tesla Insurance Limited founded in Malta with an insurance license passported across the European Union, including the UK. So yeah, stay tuned.
Absolutely. Thanks a lot, really, Jacob, for this look into the kitchen of Tesla. I'm quite sure that the entire audience will follow attentively what Tesla will cook up for us in the future. And I think that there's still a lot of mileage in terms of disruption in this sector. Thanks a lot, Jacob. So
Thank you.
after this insightful interview of Jakob Böhmer, let us now come to the panel with some outstanding participants. And indeed, I'm definitely humbled to have such a fine selection of professionals in the panel. I will quickly introduce them, even if I think, of course, it's not needed. So we have Annie Pin, Chief Commercial Officer of ALD, member of the Executive Committee of the merged ALD and lease plan, a merger that only closed on Monday. So this is big news. And he has formerly been ALD's head of Norway, so obviously a market where EVs have started, and before this, a number of positions at Societe Generale. And Annie is responsible for ALD's EV strategy and driving force behind the recent deal with ChargePoint. Indeed, a full plate you have there, Annie. Giacomo Carelli of CA Autobank. CA Autobank also created only 1 month ago, so definitely it's a time of a lot of innovations in the sector. Created by the acquisition of FCA Bank by Crédit Agricole, consumer finance. An exciting story. Formerly, Giacomo has been in a number of positions with IBM, then rather quickly changed to Fiat Chrysler Automotive Bank, Spain, UK, Poland, Germany, before then taking its lead in 2014. Giacomo has then led FCA Bank, owned by a bank, Crédit Agricole, and an OEM, FCA, before creating this year with Crédit Agricole Autobank, a unique banking player with the DNA of a captive. So I think quite specific in the ecosystem. As if this were not enough, Giacomo is also the president of Drivelia, which is CACF's car rental company, and heads CACF's international partnerships. And last but not least, Pierre Stala-Bourdillon, who's the head of Group Business Development, Motor and Mobility at Generali. Before his current role, he has worked for Uber in Italy, had positions with Amazon and with Google. So definitely Pierre is not only the right person to address motor insurance, but also for understanding how tech and mobility plays can disrupt the automotive ecosystem. So thank you all really a lot for being here. So a first round of questions. Let's start with Annie. So again, infinite thanks for being here just some days after the closure of the deal with LeasePlan. So there probably are 1,000 questions concerning the merger. I will summarize. How was it?
It was fantastic, Marcus. Thank you very much. So yeah, so we did the closing finally on Monday. So today is actually just our day 5, and I have to say, you know, it's been a pretty incredible adventure for us. Of course, you know, merging number 2 and number 1 of operational lease in the world, it's not nothing. It's been a big operation, and it's been very, very good. The teams have come together super fast. I'm amazed by the energy and the appetite of people getting together and joining as new colleagues. So it's been great, Marcus.
Okay, do you have a scoop as to the new name? I guess it's not going to be called New ALD, or?
No, it's not. So we will come up with an announcement about the new brand and the new name sometime in Q3. So stay tuned for that, because that will be a big moment as well.
Okay, great. So now the deal is closed. ALD will need to keep all of the promises made to shareholders and markets. So the obvious question is, what will make new ALD strengths in the short term in 2030?
Yes, obviously, you know, I think in the short term, it's all about scale, right? I mean, we are going to become very big. And this is basically, you know, the whole reasoning around this operation. So, I mean, big means we are going to be 3.3 million cars, 44 markets. You know, we are going to be buying 6% of the annual European production every year. So, I mean, it's all about scale, because, I mean, we believe that in the mobility world where we're going, you know, it's pretty much going to be a world of giants. So you need the muscles, you need the capabilities, you need the capacities to actually follow everyone into this new world. And we're definitely going to have this. So we are going to have, you know, massive investment possibility into sustainability and digital. So it's all going to be in the short term about our scale.
Okay.
I think, you know, you refer to the long term. So I'm going to fast forward and make it as if, you know, I was already in 2030. So by 2030, you know, NewCo and with the new name, is going to be hopefully nailing, you know, all the different steps into the mobility sector. And then I think we will have created something which is quite unique in the industry, which is actually really a service company, so a service first company, not an OEM doing service or bank also doing mobility and things like this, but really at the core a service company, which is going to be fully multi-brand. So we'll be offering all the brands of the market, multi-channel, because we'll do everything from the very large corp to the SME into the private individual segment as well. And really also multimodal, because it's about cars as an asset, but it will be also in the mobility world by 2030. A lot of other things will be bikes, trains, maybe planes, maybe drones as well. So we'll be ready for that. So in the short term, I think scale. In the long term, really the choice.
Okay, super exciting, and looking forward to see what happens then in 2030. So Giacomo, thanks also to be here just after the successful launch of Crédit Agricole Autobank, present in 17 countries in Europe, plus Morocco, having been launched only a month ago. So this is very recent. So obviously the launch of CA Autobank is a big adventure. Now, what is most exciting from your point of view about this new player?
Well, thank you. I think you said it all, Marcus, when you did the introduction. It is really the first time in the industry where former captive, with, I have to say, with some pride, 100 years of history, has become now an independent. So you can imagine the greenfield of opportunities for us to partner with large dealer groups, OEMs, and online platforms.
Yeah, so indeed, and what's interesting is that Crédit Agricole is playing with partners now in all areas of financing and point of sale, directly, B2C, B2B, credit, leasing, rental. How complete is that footprint? Is there actually anything you don't want to do, or how would you describe this?
No, I think we want to do everything. Of course, we have to concentrate on things that are useful today. There are new trends. And I have to say that what we offer in the market, as you mentioned, is a bank able to offer everything that has to do with financing, networks, and final customers, but also a leasing company. And you say before Drivalia, which is going to be present pretty much everywhere where the bank is. That not only offers operational leasing, but also daily rental, subscription, electric car sharing. So I think is the full array of products and a very wide span of customer proposition.
And perhaps just to come back to rental, that's probably something very new for banks. What is the specific importance of rental in this setup? Is that, yeah?
Well, at a certain point in time, we realized that I think there was one question at the beginning about the opportunities and threat of ownership versus usage, or usage that is replacing ownership. The rental is a very interesting way of leveraging some new trends, and namely the one of the disownership. So people rent things for a shorter period of time. There is a lot of uncertainty about new technologies. People don't want to get engaged for a too long period of time. The rental not only is meant to be whatever we know, I mean, tourism, leisure, or business, but is also a way to create mobility platforms, rentals for a period of time, alternative subscription models, and this infrastructure of a rent-a-car is really powerful to do that.
Okay, good, exciting. Pierre, coming to insurance. So insurance is surely a special case in automotive financial services. And in the past, it has been a bit of a simple insurance product like just a financial services product. It is now becoming a key component in an ecosystem that is digitizing. It's a lot about vehicle data, about after-sales traffic. It's about regulations, about usage-based insurance. What perspectives do you see for insurance in this complexity?
Well, I think first of all, it's more an opportunity than a threat, because you have the possibility of the various elements that you mentioned to have a positive impact on several, let's say, key components of the insurer value chain. So if you take underwriting, more vehicle data, both from, let's say, the VIN of each car by having the list of ADAS, or by having the behavioral data flowing into the insurer, you get better underwriting. You also get better underwriting by collaborating more with financial services providers, because the link between the credit score and, let's say, the risk underwriting is quite high, and there's a high correlation between both. So these elements are much more predictive than, let's say, previous underwriting models. And probably the second one, to say that it's a large opportunity, it gives you the opportunity to have more engagement with your customers, because once you have the data, you are able to say transparently to customers how, let's say, their current driving behavior is and will influence the future, let's say, pricing at renewal. And all this enables you to have different conversations with your clients. And we all have this issue, both banks and insurers, to have this lack of, let's say, engagement with our customers. It's a very good way of spurring engagement with our clients.
Okay, so a lot of opportunities, new things. Now, for an incumbent insurer like Generali, what is then the biggest challenge in going this way?
Well, unfortunately, this one is quite easy. So we have huge issues with, let's say, IT deployment. So because we have, let's say, by legacy, one setup or several IT setups per country. So till we are talking with traditional, let's say, incumbent financial services institutions, I think it's fine, because they pretty much have the same issue. But if we are taking with new car makers, either the Tesla of this world, or let's say Chinese car makers that are hitting the road in Europe, they usually want to scale up very fast and have, let's say, unique value proposition by market with a unique IT deployment. And so we have this issue of not being fit for purpose for what they want to do. But this is an issue. But on the other side, let's say that incumbent insurers have the chance of having, let's say, a quite legal and loyal, let's say, client base with respect to other industries. I think the churn is across the board pretty much around 5%. So at the end of the day, we have probably a bit more time than other industries to make the shift. Okay, great, very interesting. Perhaps another question to Annie now. In everything that the panelists are saying, although finance seems to become richer, more complicated, now especially electric vehicles, they bring a lot of complexity, and players need to actually master activities beyond financing. Huh? So there are not new things like charging, like energy management, mobility management, perhaps also more managing the customer. Where do you see the biggest challenge in these additional activities running up to 2030?
Yeah, so I mean, I think I don't think electric is actually more complicated than former technology. I think it's newer, and therefore the ecosystem is less mature. And when things are less mature, tend to be a little bit more complicated, or seem to be a little bit more complicated because it's not consolidated yet, and it looks from a driver perspective a little bit like a jungle. So you just need to make some clarity for your end clients, so that you actually take that complexity or that appearance of complexity and translate it into something which is simple, accessible, understandable for your end driver or your client, right? And I think our challenge is actually this, is exactly this. How do you actually take that complexity and translate it into something which is simple and intelligible for everyone? And that means, because the value chain is getting bigger, the ecosystem is getting bigger, there's new players coming in, charging companies, as you mentioned, Pierre, other OEMs and things like this. It means that we need to actually work more together. I think, for me, it's very important, and it's part of our DNA in ALD, that we don't work in silo, but actually work cooperatively, every player in the ecosystem, because to be honest, if it's just for us, we won't be able to do it all. So this idea of cooperating in an open architecture as partner, that's the main challenge, I think, for us, who are all working in this like big mobility ecosystem, right?
So very interesting, because in part you resonate what Jakob said in terms of simplicity. So it's a bit back to simplicity, and on the other hand, it's cooperation. And that's very interesting that you have created a joint business with charge points on European charging services. And this is probably to better fit with the ecosystem, the energy ecosystem. How important is it actually to play with this charging ecosystem and infrastructure for your customers and for your business model?
Yeah, well, it's actually critical, you see, because when you think about electrification and when you think about, you know, the barrier to electrification, for the client, it's really, really about just charging. It's actually not about, you know, the technology or what they think the technology could be. It's not even about the price. You could say that the price plays a big role, but I think the clients by now have understood that the total cost of ownership of a BEV, a full EV, is actually cheaper than the one of an ICE car. So it's not about this, but it's really about the complexity of the charging ecosystem and where to find, you know, your CPO, your charging, your wall box. How does it work with the reimbursement of the charging, the reinvoicing, the reporting, the data, and everything? So that's exactly what you said, Marcus. You know, our joint venture with ChargePoint, which has just been announced, is our attempt to, again, you know, make something simple for the clients. So in this joint venture, what you will get is what we call an EMSP, so an e-mobility service provider, who is going to be, for the end driver, providing a single reporting, invoice, point of contact for all the charging, whether they are on the road, at home, or at the office. Sounds very simple, but it's actually, in the reality today, very, very complicated for the driver. And then the second thing that it does is that it puts everything for you into an app, so that you as a driver, you can get, you know, facility, but you as a fleet manager, you can also get all your consolidated reporting and all the data that you need. So it's really a data play, and it's really meant to be, you know, something quite unique, because it's meant for the fleet client and not for the driver himself or the private individual.
Okay, so the complexity is in making it simple. That's the thing.
Exactly.
Okay, great. Giacomo, it's actually fascinating to see the recent development of Crédit Agricole in automotive, not only with CA Auto Bank, but also investing in Cosmobilis, which is one of Europe's largest dealer groups. Now, what is the driver for a major universal bank in Europe to enter so heavily into real automotive and mobility?
Well, first of all, I would say Crédit Agricole is I'm getting to know them more and more. It is a bank that is a universal bank. It's the largest bank in Europe in terms of retail customers. However, the mindset is really the one of a startup. And I was really positively surprised by this mindset. And one of the action we made of acquiring parts of Cosmobilis shows this mindset. The reasoning is simple. Large dealer group are becoming the most important distribution channel today in Europe. Partnering with them means securing a very well structured and seamless customer journey. That's what we want to do. We want to focus on the customer, and together with Cosmobilis and other large dealer groups, we can do that.
Okay, so definitely getting closer to the customer, even if this means entering more into a new business. And then concerning Universal Bank, you say they are functioning a bit like a startup. Now, how is it to be backed up by such a big bank with a big balance sheet? I guess that there are advantages and challenges. Is that true?
Yeah, absolutely. I mean, working for a large bank, notwithstanding the very, I mean, the startup mindset, which is evident and clear, implies also having, I mean, climbing on the giant shoulders of one of the largest banking group in Europe and in the world. So the brand name itself says it all, and I don't have to add. The drawback, as usual, is you have to deliver certain results, and you measure on that. But this is not a drawback. This is really an incentive to be even more motivated and run even faster.
Okay, good answer, Giacomo. Now, Pierre, in insurance, we increasingly see initiatives by OEMs to actually take over part of the activity or all of the activity, like for instance PPI, but also getting interested in auto insurance. Where actually the future interesting place for insurers? With OEMs, other partners, directly with the end customers? Where's the real opportunity here, Pierre?
It's a very pertinent question because no one really knows, let's say, which model. So a lot of car makers are making a move, but no one really knows which model will work for the future. So across the spectrum, you can see different ideas with several roles by car makers. Probably the lightest ones is car makers still sticking to partnerships with insurers. The second one is, let's say, OEMs taking a larger share, especially of the digital journey, and acting a bit as what is called an MGA in insurance. Tesla would probably fit into this category. And then you have other car makers that are willing to go for a fully fledged, let's say, primary insurance company. And so what we can do depends a bit of, let's say, what our client wants to do. So usually the various plays that we have is both to act as so across the various aspects. So either to partner with them on distribution, or if they work more as, let's say, an MGA working with, let's say, IT and digital capabilities. And for OEMs that are willing to do, let's say, the primary insurer journey, then it's probably a mix of, let's say, reinsurance play by acting as a risk capacity provider, and or by, let's say, having some value-added services in order for us not to be completely commoditized. So TPA, so management of claims, fronting services, consulting services in some cases are probably some ways for, let's say, insurers to get back some of the values that, let's say, in that case, the OEM will take in the future from working in this way.
Okay, so definitely you need to position with the other big stakeholders. You probably also need to position in the technology. So as we go towards a greater share of usage-based models, enhanced vehicle connectivity, ADAS systems, how do you foresee the impact of all of this technology connectedness on motor insurance in the medium to long term?
So of the various ones that you mentioned, probably the first one is probably non-technology that I would highlight is the fleet from the shift, from personal lines to commercial lines. So as, let's say, there's a shift from ownership to usage. A lot of our clients who are losing some traditional clients, and then the issue is that, let's say, the fleet clients are getting bigger and have a higher, let's say, power in the negotiations than they used to have. So this is a bit, let's say, a procurement issue that we might have in the future on this one. The second one regarding, let's say, what you mentioned around UBI and telematics. So I see telematics in all markets picking up. Italy has led the way with hardware-based solutions. The UK has had some good results on young drivers, but now what I think will be the future, probably even more than OEM, let's say, intermediated with vehicle connectivity, but will be, I think, mobile-based solutions, at least for the foreseeable future. We have seen a huge take rate in the US by some of the largest insurers like Progressive, and I think this will happen as well in Europe. On the last one that you mentioned, so I think it was ADAS. So on ADAS, I think the impact is still yet to be understood. So we have a decrease of frequency because ADAS works, even if not all ADAS are working the same, because the calibration is done differently, because the providers of ADAS are different one from another. But probably the impact is then also on how the claims and the average cost of claims is getting also higher, because you get a bumper with more sensors, for instance. So then, let's say, a partial impact on a decrease in frequency is probably unfortunately offset by an average cost of claims that is getting higher. So this is, let's say, part of the equation and how we are tackling it at Generali.
Okay, so indeed, it sounds like a lot of change ahead of us, and also a lot of uncertainty. So thank you all, to the entire panel, to these hugely interesting insights on how financial services and automobility are increasingly intertwined, with a lot of uncertainty of how exactly this is going to happen. So definitely good reasons to engage in a community where we can make sense out of all of this collectively. I mean, no one has the truth, has the answer, but collectively probably we can accelerate our understanding. So again, a big thank you to all of you to have been here. I now ask Lukasz from Qorus to give us a little outlook on events down the roads in order to conclude the session.
Thank you very much, Marcus, and as well, I appreciate all the speakers. I think we can call it a wonderful first course that we just had, today, as the launching event. Obviously, step by step, event by event, and initiative by initiative, will be including more and more institutions, more and more attractive speakers and insights that will be shared. And as you can see in front of you, we are going to continue on 28th June already with our second event dedicated to the topic from owning vehicles to using vehicles. So exactly, one of the topics that was among the options today, whether it is a challenge, opportunity, or how do we really understand, the different topics. After the summer break, we'll obviously, cover another topics in September, October, and November. You can see it actually for yourself. If you just, follow the QR code on the right side of the slide, you will see all the details about the events. You can pre-register even right now, share it with your colleagues, because as I mentioned in the very beginning, these events are for the moment open, accessible to all of you. And even if you have, some stories to share, we are more than happy right now to hear it from you, that you can participate, join, be among the panels, or even delivering one of the keynotes, insights that you believe your institution can offer. And before we close it a day, or before we call it already a summary or wrap up of the session, what might be the best steps? What we definitely prefer and suggest. Please follow the website of qorusglobal.com, find a mobility community, become a community member, update your preferences based on the topics or exactly what you have around the discussions, the updates that you want to receive from our side. Because apart, from the events itself, what we'll try to do is to compile the very best insights, identify the best practices, and give you a guidance on the road of the future of mobility in financial services industry. Feel free to join any of the discussion that we'll be having either through online events or dedicated platforms that are for that directly on the website. And enjoy the full benefits that right now Qorus and CVA are offering to you, because as I said, this is a unique place for financial services executives, which will later on, include as well other industries who are connected to the mobility ecosystem. We believe that we can co-create the future together, and this is the place to do so. So I guess that's it from our side today. Once again, appreciate to all the speakers that found the time to join us today to share their insights, wisdom, and at the same time, the next direction. If you want to, as I mentioned, get in touch with us to gain either more information or play an active role during the upcoming initiatives, here are our contacts. We are more than happy right now to help you. We are more than happy to engage you, and we are more than happy to serve you with the very best insights around mobility community. And that's what Qorus and CVA are here for. So whenever you will see the logo or the design that you see on the right side of this slide, it's dedicated exactly to the mobility topic and to the next best insights around the topic of your interest. So I guess that's it from all from us, from Qorus, CVA, and all the speakers that took part. We'll be sharing with you shortly, thank you email, including probably a couple of the key outcomes from the session. So even if some of you, especially those who cannot participate in a live session, missed it today, please do not hesitate as well to get in touch with us, because we'll be happy to share with you the outcome of the key findings, key messages, and highlights from today's session. Thank you so much. Wish you a wonderful day.
Thank you, everybody. Thank you very much indeed.
Thank you. Cheers.
Bye.
Bye. Good day to everyone.